Welcome to Mrs. Moneybags Live. This episode is sponsored by quickequity.ca, getting you to your money fast by providing mortgage solutions to clients all across Canada. I am your host, Nicole Williams, aka Mrs. Moneybags, mortgage agent level 2. We go live Monday to Friday, keeping you informed on the latest mortgage, real estate, and money news. This is a reminder to do your own research. This show is intended for information purposes only. We are thankful that you're here, and thank you for tuning into this next episode. Let's get into mortgage industry news for the day. How was your evening? How was everyone's evening? So let's get right into it. So here is your summary of mortgage and housing news from across Canada for Wednesday, February the 7th, 2024. So we're going to cover the next two articles. So the Canadian dollar seen up, but gains restrained by mortgage resets. Let's take a read. The Canadian dollar is set to strengthen over the coming year in the U.S. Federal Reserve as the U.S. Federal Reserve cuts interest rates as expected. But its gains could be held in check as mortgage renewals weigh on household spending and economic growth. The median forecast of 40 foreign exchange and analysts surveyed in February 1 to 6 poll was for the loonie to strengthen 0.7% to 1.34% per US dollar, or 74.63 US cents in 3 months, matching the forecast in January's poll. It was then predicted to advance to $1.30 in a year, also matching the previous month's forecast. The expected strengthening comes as some analysts forecast broad-based declines for the US dollar. The greenback is likely to weaken in 2024 as US economic growth slows to a pace that is more in line with the rest of the world and the Fed starts cutting rates. Canada is a major producer of commodities, including oil, so its economy could benefit from an improved global outlook. Still, analysts expect the pace of mortgage renewals to hold back its economy. Canada's mortgage cycle is particularly short. The typical loan term is 5 years or less, versus 30 in the United States. And many households are likely to renew at a higher rate after borrowing heavily at rock bottom levels during the pandemic. Upcoming mortgage resets and the Canadian dollar's lower sensitivity to moves in the greenback than some other group of G10 peers could restrain gains for the currency. We expect the Canadian dollar to appreciate on our broad US dollar outlook, but it is unlikely to be the G10 outperformer. Okay, so what are your thoughts on this? They're predicting that the Canadian dollar should see a bit of a slight increase versus that of the US dollar. They are attributing this to the weakening dollar based on the fact that the US economy is going to start to slow down in pace to match that what the rest of the global economy has already seen. And as a result, because of the commodities that Canada trades, such as oil, we may benefit from the economic requirements of these other nations. What are your thoughts? And then also keeping in mind the comparison of the loan terms on average between Canadian mortgage loan terms versus that of the US mortgage loan terms. We read in this article that Canadians typically have terms of on average of 5 years or less, whereas in the States, their average term is about 30 years. That is a huge gap difference. And the fact that many clients' mortgages will be coming due that were initially negotiated during the pandemic may also raise a little bit of concerns for the dollar really doing that strict outpace that they potentially could versus all the other G10 nations. What are your thoughts on that? Drop your comments in the below, and let's get discussing. There's another article I wanted to cover. I think this one is especially going to be something for us to monitor over the next little while, especially if this may produce a precedent. We don't know if it is, but it's a very important article that I want to cover nonetheless. Let's take a read. So, real estate commission lawsuit expands across Canada. A lawsuit alleging that the real estate brokerage industry inflates commission fees has been expanded to include all of Canada, and an expert says it could bring big changes to the housing market. The class action suit filed in federal court last month names 72 different regional real estate boards, 10 real estate franchisors, and 8 real estate brokerages as defendants. The class action is quite substantial and is pretty huge, says the co founder and market analyst at thepropertyguys.com. The lawsuit comes after an original suit was filed in federal court in September on behalf of home sellers in the Greater Toronto Area against the Toronto Regional Real Estate Board, better known as TREB. None of the allegations have been proven in court. The latest price fixing suit alleges that an unwritten arrangement known as the buyer brokerage commission rule, which has become the norm for many residential real estate transactions, violates competition laws. When a home sale closes, the seller typically pays a brokerage commission fee, which is a percentage of the entire sale amount. The fee is normally then split between the representative of the seller and the buyer and is customarily shared evenly. This was the case with Milton resident Kevin McFall, that the named plaintiff in the case, which is also facing the named plaintiff in the class action lawsuit. Excuse me about that. In the court documents, McFall alleges he sold his home in May and paid a 5% commission on the sale, half of which went to the buyer's brokerage. The suit claims that this system incentivizes buyer brokers to direct their clients away from sellers offering lower commission fees, artificially inflating them over time. We're talking about rules that drive policies and policies that drive behavior and behaviors that drive outcomes. The Canadian class action comes on the heels of a similar case in the US. In a precedent setting October decision, a Missouri court handed down a guilty verdict in a price fixing lawsuit brought against major US real estate players, including the National Association of Realtors and REMAX. The plaintiffs in the case were awarded 1.8 billion US in damages. When it comes to Canada, it's the same type of allegations. The lawyers behind the class action are saying that certain rules prevent competition in the buyer brokerage industry, which led to falsely inflating real estate commissions there's really so that's really what the focus is. The Canada-wide class action suit claims that the Canadian Real Estate Association helped brokerages facilitate the alleged price fixing scheme. The organization says the allegations are without merit. CREA, which will continue to vigorously defend against these claims. They said in a statement to BNN Bloomberg. The association claims its listing systems are efficient and effective cooperative marketplaces that bring together realtors acting on behalf of Canadian home sellers and buyers and are both pro competitive and pro consumer. After the Missouri court decision, there is a copycat class action suit have begun to be filed in 11 US states with the potential to exceed 100 billion in damages. Decisions in the US courts will likely influence the behavior of realtors in Canada, noting that many brokerages are already changing their commission rules to de-risk their business in the long term. It really depends what the folks that are involved in the American suits want to do here in Canada. But we hope that any change is good for consumers. He noted that some analysts have estimated that real estate commissions in Canada could come down as much as 30% as a result of the legal action. Those are the types of things we'd love to see in the market. What are your thoughts on this about the current class action lawsuit that has now been expanded across the country, and the fact that Missouri also recently had a decision that came in favor of the sellers and the consumers, and the fact that how much was it, 1.8 billion US was rewarded in damages? What are your thoughts on this? This is something that I find to be, really, really groundbreaking, regardless of who side seems to be victorious at the end of this. At the end, we will have some kind of precedent on, how this type of real estate transaction may look moving forward. And even if, let's say, the real estate board isn't found guilty, the fact that what has happened and has already begun to happen in the States is going to have some form of influence, as we already seeing, with how brokerages will continue to do business and what their practices may look like. So, what are your thoughts on that? Let's get talking. Drop your thoughts in the comments below. But this is definitely something that's new and something that we will have to follow, as I said, because the class action lawsuit is newer, but it is something that we already seen some results in Missouri. We heard that 11 additional states have joined in on a similar type of action, and the fact that this now has gone from being a Greater Toronto area case to now being a national case will indicate that perhaps some changes may come as a result. What are your thoughts? Drop them in the comments below. So today's financial tip of the day is to pay yourself first. I know many of us know and have heard about the rule of paying ourselves first, but how many of us are actually working at implementing or actually have a plan and strategy in place to ensure that we pay ourselves first? If you cannot put your hand up, then this tip is for you. Today's tip is all about paying ourselves first. Set something up where it is automated, that as soon as income comes in, you're taking a portion out. And, the saying is that you don't kill the bird that lays the golden egg. So once you start paying yourself first and putting this money aside, the goal would be for those funds to be used for futuristic endeavors that can create other avenues for wealth creation. Pay yourself first. Today's Miss Moneybags money affirmation is: I am grateful for the abundance in my life. I am grateful for the abundance in my life. Let's say that together 3 times. I am grateful for the abundance in my life. I am grateful for the abundance in my life. I am grateful for the abundance in my life. That's all the time we have for today. Thank you for tuning in to Mrs. Moneybags Live, and we'll see you again tomorrow.